Hi, I'm Richard Siddons and welcome to UK Property Accountants and this free series of videos on capital gains tax. And in this episode, we will be looking at what happens when part of a property is disposed of and how enhancements affect capital gains tax. Each episode builds on information in the previous episode, so be sure to watch the whole series. What follows applies to UK resident property investors who own UK residential property in their own name. This is a fictional example aimed to provide generic information. To understand your specific situation, you could seek advice from a qualified chartered professional. Calculating capital gains tax on part disposals is more complex than on a full sale of a property. For part disposals, the calculation starts with the proceeds from the portion sold. As with a full disposal, we deduct the acquisition and disposal costs, but these must be apportioned between the part sold and the part retained based on their respective values at the time of the sale. Let's consider a more complex situation where Edward has a property and he has purchased it's a house with a granny annex. Edward decides to sell the annex to his friend on the pretense that his friend operates the rental of the annex. The annex is sold for £120,000, which is also its market value at the date of sale. The remaining part of the property which Edward retains is valued at £280,000. To apportion the original expenditure, we calculate an apportionment ratio using the following formula. Apportionment ratio is equal to A divided by A plus B. A are the sale proceeds from the part disposal, which in this case is £120,000, and B is the market value of the part retained, the £280,000. Applying the formula gives us £120,000 divided by £120,000 plus £280,000, which is 30%. We now apply this 30% apportionment to the relevant costs. So the disposal costs, which may include things like legal fees and agent fees, 30% of, say, 5,000 is 1,500. So the net sales proceeds would be £120,000 minus £1,500, which is £118,500.
We also need to factor in the acquisition costs we considered from episode 1, totaling £164,000, which included the original purchase price of the house, the legal fees, the valuation fees, and the stamp duty land tax. We now apply the 30% apportionment to these costs, so the acquisition costs of the part disposal of the property are 30% of £164,000, which is £49,200.
Therefore, the capital gain on the part disposal of the annex is £118,500 minus £49,200, which is £69,300. Distinguishing between capital and revenue or repair expenditure is often highly complex. Broadly speaking, costs that go beyond simple repairs, meaning they do more than restore the asset to its original condition, are typically treated as enhancement expenditure. Such costs may be allowable as deductions when calculating the capital gains, further reducing the capital gain. So, for example, if Edward built a garage onto the side of the property for the use of the occupants in both the main house and the annex, and it costs £3,000, this would be considered an enhancement to the property that would increase the value of the asset. Since the apportionment ratio has been determined that 30% of the property is being disposed, we can consider only 30% of this expenditure, which is £900. If we now include the enhancement expenditure in the estimate of capital gains tax, the taxable gain is £69,300 less than £900, which is £68,400. Any enhancement that is specifically incurred on the sale of the part of the property that is sold, the whole amount of that enhancement expense can be deducted. In addition to the above example, let's imagine that Edward, during his ownership of the entire property, decides to install fitted wardrobes into the bedroom of the annex, and they cost £2,000. Since this expenditure applies only to the part of the property sold, all of the enhancement capital expenditure can be deducted. Therefore, the capital gain is £68,400 minus £2,000, which is £66,400.
In the next episode, we will be looking at three very different situations that most people tend to find themselves in. The first one, we will be looking at what happens when a person moves away from the home for a period of time. Secondly, what happens if the person moves into their home much later after purchasing the property. And finally, we'll be looking at what happens when someone has a lodger. Join me in episode 3 next.